Hi guys, it's Birb here and welcome to today's exclusive report. And today I'm going to briefly tune you in to let you know a couple of important details in addition to what I wrote in the Bitcoin report in the written form. So this is supposed to be serving as a complementary, analysis to what you read in the Bitcoin report. So here's the new version of Birb applied with the baseline bands and with the trailer, with the hot time frame trailer, with the current time frame trader CTF, okay? Which basically tell you about the narratives, the major short-term narrative that is actually defined by the major resistance of 55,481. This is the high time frame trailer. Okay, this is tells you the main bound, the main resistance, the main level defining the sideways, as long as it's flat as it was ever for the entire periods on the sideways. This basically tells you about that this level, high time frame trader level, needs to be broken in order for high time frame implications. Okay, so here we are talking about high time frame implications, about daily implications. Knowing of that again, we have the current time frame CTF trailer, which tells you about the short term implications. So anytime you would see a major breakthrough, okay, and a major on the lower time frame, it's going to be mainly defined by this current CTF trailer. Major breakout on the high time frame perspective, on the high time frame level, is going to be defined by this high time frame trailer. As simple as that. Okay, this shows you the long-term direction. This shows you the short-term direction. Here it was falling. Mainly it's flat for the most of the time. For the majority of the time, it's flat. So a strong combination of trend and main resistance for your reference. And what we know for sure is that these standard deviation based baseline bands, the momentum bands, if you will, the low band and the high band, they narrow down the most probable levels for you to see Bitcoin trading between. Okay, so we know for sure that the range is defined between the high band and between the low band in the extreme ways between basically 44,000s and 50,000s, or in the more conservative way between 45,000 and 49,000, if you will. Okay, so this is a range inside a range. So most of the price action is supposed to be happening inside this interior kind of inner range. Okay, inner range defined by the momentum bands in here, with chances of seeing some extremes, right? So whipsaws inside this area. So whipsaws area are going with the liquidity hunts, bird traps, bull traps. If they are supposed to happen inside of this local sequence of non-directional movement, then they are supposed to happen inside the band's extremes. Okay, so it is 49 to 50,000 is the range highs area where you could expect resistance to play based on the average volatility, and similarly on the opposite end, you would have 44 to $45,000 as the main support or demand area based on the baseline bands, the momentum bands. To me, that there is a chance that we would see more explosive movement. More explosive as in going to the either band extremes, perhaps marking first the lows and then going to the highs of the bands, or potentially even a proper breakout, right? Unlocking the upper levels. So based on the other, on-chain readings, based on the overall fund narratives, based on the overall fear and greed index readings, historically, anytime we've been inside the extreme fear area, this has always usually been of the good buying opportunity, or at least much better buying opportunity than it was for selling, right? So basically, I would everybody expect us to have it as an accumulation range in order to flash some more bullish movements, perhaps as we are nearing the end of the year, or the early Q1 next year, right? So the only thing from the higher time frame point of view, nothing's changed on my end, right? Nothing's changed, as I had mentioned several times. All my assumptions for the 100K targets and the overall fifth leg up of the bull run and the fifth wave of Elliott, right? All of that stands still. All of that is still relevant. The only thing that is just kind of unexpectedly occurred is just this sideways. And this sideways that takes, 3 weeks already, almost, right? So this is taking up almost 3 weeks, like 2.5 weeks. This is this local disruption interruption that is not relevant from the high time frame point of view, but it just happens, right? So this is the extension period. This is the time that the bull market, just lasts longer for, right? That's it. I mean, we're not canceled for the bull market. This is just local noise, local random disruption caused by external factors that doesn't really imply any high time frame reversals or changes. Is just an interruption. It's just an interruption that you need to handle, just an interruption that you need to be patient with. It's tasting our patience heavily, of course. But the less you do in here, in this region, especially if it's trading inside the bands or between the bands rather than outside, when it's trading in range and sideways in the extreme fear, well, this is where we're doing least, doing nothing probably does best. Okay, the market is going on sideways. The market is standing and waiting on sidelines, and so should we. So should we, right? That's all, everybody, I've got for you. I hope you enjoyed that, and well, I hope you enjoyed the new version of the Beeper as well. This is kicking ass. I mean, I love it. It works. Months of works for the entire team and SignalFi included. This is pretty wild. Love you guys. Stay safe. God bless. Bye bye.